So how do I find stocks that are beating the market? How do I know if a stock that I wanna buy is beating the market? This is a very important question because if you want to buy stocks that have a high growth potential, you need them to beat their index of reference. Hey, it's Dario and this is Divity Trading, a platform where we can share our best tips and tools when it comes to trading, investing, or finance in general. And if you love the subject, please consider subscribing. Out there are so many stocks available. If we just consider the US stock market, we have something around 7,000 stocks. But not all these stocks are good and not all these stocks are performing better than the market. So how can I verify if a stock is beating the market? To do that, we just need to use the so-called index of relative strength. And no, I'm not talking about the RSI. But hey, if you enjoyed the video, please leave it a like and let me know in the comments down below if you already knew about the index of relative strength. And do you know how to use it? To use the index of relative strength, and again, I'm not talking about the RSI, we firstly need to understand what this indicator is. So this indicator, it's just a ratio between two different instruments. Basically, it makes a comparison between one instrument and the other by actually dividing them. For example, if I want to make a comparison between a certain stock and a certain index, such as the S&P 500 for example, I can use this indicator and it will plot me a chart. If the line on the chart is declining, that means that the stock is weaker than the S&P 500. On the other hand, if the line on the chart is increasing, that means that the stock is stronger than the S&P 500. Now, and this is very important, if the line on the chart is increasing, it does not mean that the stock price is increasing. This is just because it's a fraction. So we have either a numerator that is increasing, so the stock is actually increasing its price, or we can have a denominator that is decreasing. So in this case would be the index, the S&P 500, that is decreasing, without the need to have the stock to increase. And in both these scenarios, so the stock increasing or the index decreasing, we would still have the same increasing line. In addition, we can have a scenario where the denominator, so the index, is decreasing at a higher ratio than the numerator, so the stock. And so in this case, we would still have the line increasing. The same thing applies with the decreasing line. In this case, we have either a numerator that is decreasing, a denominator that is increasing, or a numerator that is decreasing at a higher rate than the denominator. But so how can we use this indicator? Well, the first option that we have is the one that we talked about earlier. So we can compare a certain stock with the general market. So we can take a specific stock and compare it with the S&P 500, the Russell 2000 or the general Dow Jones. Another way is to compare a certain stock with its sector's index. So for example, if I want to see if Autodesk is beating its sector of reference, I can compare it with the Dow Jones Technology. To know the sector of a stock, you can just use finviz.com, you type in the name of the stock and it will tell you the sector. I will put a link for finviz.com in the description. But where do I find the indicator? How do I plot the chart? Well, to do that, you obviously need to use a platform for stock analysis. And in this case, I can recommend you to use the Pro Real Time. I will put a link in the description. For this platform, it's very simple. You just add the indicator, choose the index of reference, and then when you type in the search bar the name of the stock you want to compare, it will automatically compare it with the index you chose earlier and then plot you the chart. In this case, for example, we can say that from November 2018 and February 2019, Autodesk was beating its sector, whereas from February 2019 till now, it's neither outperforming or underperforming its sector. One thing to keep in mind is that you need to compare the stock with a relevant index. You cannot compare a US stock with a new European stock index. It doesn't work that way. It would just give you results that are insignificant. You need to compare it with the right country and also the right sector. Another good way to use this indicator is to find the best sectors to invest in, the sectors that are beating the general market. If I compare a sector such as the technological sector with a market of reference, such as the US market, I can see if that sector is outperforming or underperforming the market. To do that, it's very simple. It's like with stocks. You just take the indicator, put in the index such as the S&P 500 or the Dow Jones, and then when you go in the search bar, you search for the sector's index, such as the Dow Jones Technology, and then the indicator will plot you the line of relative strength. In this case, we can see that from November 2018 and April 2019, the technological sector, was doing better than the S&P 500, whereas from April 2019 till now, it's doing worse, so it's underperforming the S&P 500. So at this point, it would be a nice idea to consider not investing in this particular sector. And so this is how you can compare a stock or a sector with its index or market of reference. And hey, if you enjoyed the video, please leave it a like and let me know in the comments down below if you already knew about the index of relative strength and did you know to use it in this way? And I'll see you in the next video. So why is it important to have a retirement plan even if you're young? So time makes money with two different mathematical concepts: addition and compound interest. The first one means that if you save little money every month on a 40+ year scale, you're going to have a pretty decent sum. The second